And the result is that all the traditional models are broken. When we ended up buying nearly $4 billion, $3.97 billion of Bitcoin over that time period. So in terms of like our strategy.
Hello again, welcome back to the channel. Today we are going to talk about current economy in today's world and reveal Michael Saylor's investing strategy that showed incredible returns. As you can probably tell, in today's economy, it's hard to gain positive results. Gold, silver, and majority of the stocks are down, and even bond index, which is considered to be a safe investment, is down about 17% over the year. This seems like a huge problem for investors that are looking for a safe and profitable investment instrument. Let's check out the latest interview with Michael Saylor as he explains the current market and how did we get here to begin with. And in the end of the video, Saylor will explain his strategy to hedge his investments and even gain huge profits in this bear market. Don't forget to like and subscribe if you enjoyed the video. Let's not wait and jump to the clip.
If we look at the past year, what you've got is a drawdown of all financial assets. So the NASDAQ is down about 22% over the past year. And so NASDAQ represents tech companies and all the risk assets. But on the other hand, if you were to go and look at like the bond market and the bond portfolios, bonds are down, like the BOND index, the long bond index, it's down almost 17% in the year. So for 30 or 40 years, you had this 60-40 bond portfolio, and the idea was
bonds were considered a safe space.
The idea was if stocks work, then bonds will be a low return and stocks will be a high return. But if stocks trade down, people will shift their money to bonds, and the interest rates will go down, the bonds prices will go up, and you'll actually get a yield on your bond portfolio. But of course, that broke around March of 2020. And the reason it broke in March of 2020 is because interest rates got pegged to zero. So after we had lowered interest rates from 5%, 5.5% to 5 to 4.5 to 4 to 3.5 to 3 to 2.5 to 2 to 0, and left it at zero, then the debate was, can they take interest rates negative? If you can't take interest rates negative, then bonds don't act as a hedge to stocks anymore. I mean, you're at the end of the road for bonds. And what we saw with stocks is the Federal Reserve printed a bunch of money, pegged interest rates at zero, and then you saw all these risk assets explode. You saw the NASDAQ explode up and the S&P explode up. You had a K-shaped recovery. And in the K-shaped recovery, it's almost like the entire economy was in a train wreck or in a car wreck, and we got taken into the hospital and they pumped us full of morphine. And if you've ever been in a bad accident and then first you're in pain and then they pump you full of painkillers and then you actually feel pretty good. And you're sitting there and your arm is broken, but you're high on morphine or high on something. And you feel pretty good about it. And you're thinking, why don't I just go break my arm and do this all the time? And then at some point, there's part of your brain that says, I'm going to come home from the hospital and I'm going to get off this painkiller and I'm going to be in great pain for the next 3 months or 6 months or whatever it is. So I think what happened here is the Fed just pumped tons and tons of liquidity, and we stayed high for about a year and a half. And I remember when Jerome Powell said, "I'm not even thinking about raising interest rates," and said strongly that it'll be till 2024 before interest rates start coming up again. But here we are in 2022. And now instead of raising them a quarter point, each time, now they're raising them 75 basis points. So they're taking 3 steps at a time, multiple times. So we took the cost of money down faster than any time in history. And now we're jacking up the cost of money faster than any time in history. And the result is that all the traditional models are broken.
As Michael Saylor said, Over the time, the government broke the traditional models, but not all of them are within the reach of the government. In this second clip, Michael Saylor retells the success of MicroStrategy, and how did they manage to gain huge profits, when almost all of the instruments ended up in the negative. There is one asset that has shown strength over the period of time, and MicroStrategy took advantage of that. But what was the strategy behind all of this? Let's jump to the clip to understand it clearly.
Let me give you a 2-year post-mortem since we started dealing with this issue. MicroStrategy we had a $500 million of cash, and we saw interest rates at 0. And we saw the stock market inflated in the summer of 2020. And we said, well, what are we going to invest in? And we looked around at everything. Should I buy gold? Should I buy land? Should I buy art? Should I buy some crypto asset? And what's going to happen next? So what we did is we decided to buy Bitcoin, and we bought $250 million of Bitcoin August 10th, 2020. And then around September 10th or so of 2020, we bought another $175 million of Bitcoin or something like that. And then we started buying Bitcoin more in December, and we kept buying Bitcoin. We ended up buying nearly $4 billion, $3.97 billion of Bitcoin over that time period. So in terms of like our strategy, MicroStrategy has just bought as much Bitcoin as we get our hands on since August 10th of 2020. And in that time period, stocks gyrated north, they gyrated south, currencies have changed. So let me tell you what's happened. MicroStrategy stock, our stock is up 94% since that day.
Well,
Bitcoin is up 77% since that day. The S&P index is up about 18%. The NASDAQ index is up 7.5%. Gold is down 16%. The bond market, if you just bought bonds, they're down 18%. Bonds are down 18%. And silver, if you think silver was better than gold, it's down 32%.
geez.
Now, if you go on and say, okay, well, fine, let's just buy big tech. If you had bought the greatest of the big tech companies is Google. Google is up 41%. Apple is up 39%. Microsoft's up 22%. You might have won. Those were all better investments than the S&P. Much better than NASDAQ, much better than gold. Not as good as Bitcoin, not as good as MicroStrategy. But if you bought Amazon, you're down 18%. That was overvalued in the summer of 2020. A bunch of 20-somethings were just buying Amazon because they thought, well, we're all ordering Amazon stuff, so it must be good. Well, when you buy something that everybody else understands to be good at the same time they all agree with you, it's normally bad.
Yeah.
Facebook is down 41% since then. Netflix is down 54% since then. So half the big tech got shellacked. The other half did pretty good. And now, last point, what if you bought enterprise software? We compete against companies 100 times as big as us. Oracle, SAP, Microsoft. Oracle is up 39%. IBM's up 6%. Salesforce is down nearly 20%. SAP is down 45%. So, summary for us, MicroStrategy's strategy was buy as much Bitcoin as you can and buy it with equity and debt. We borrowed money. We borrowed $2.2 billion at a blended interest rate of like 2% or 1.8%. So we borrowed cheap money while money was cheap, and we bought Bitcoin. Now people are saying, that's stupid because Bitcoin was trading up and then it traded down. At the end of the day, if your time horizon is a decade or longer, if you can borrow the money for longer than 5 or 6 years and you can hold it through the volatility, then raising cheap money, grabbing billions of dollars at low interest, and then investing in a scarce, desirable asset that's got sort of a technology appeal and holding it for a long period of time, that's going to be a good strategy. That's why our stock is outperforming Bitcoin. That's why we're outperforming all the enterprise software companies, all the big tech companies. And the reason Bitcoin's outperforming all the other asset classes is because it's scarce, it's desirable, it's technical. No one's going to write a piece of software to make gold better. You're not going to put gold on a billion iPhones. Whereas Lightning is a protocol that's been rolling out lately. Square Cash App or blocked Cash App put Lightning right into Cash App. It means that you can send $100 of Bitcoin to anybody in the world on a Saturday afternoon for less than a penny, instantly, peer-to-peer.
And that's it for today. If you enjoyed the video, please leave a like and subscribe for more economy-related videos. And check out this video with Michael Saylor, talking about the dangers of new government-issued policies, and how can they affect the economy. This was Investalence, and we'll see you in another video.